Maintaining deltas. This is a fun piece. The questions they decided to, the research team decided to, people ask us all the time about the number of adjustments that we make. Mm-hmm. And we've always said that based on our research, you can be very aggressive with your adjustments or you can be very hands-off.
Sure.
And the results are very much the same.
Sure.
Then if that's the case, why are you guys so aggressive? And I'm like, first of all, when you say you guys, I'm more aggressive than Tony.
Yes.
That doesn't make me any more right than him. And today we're going to prove that, we're going to show you some research that shows that you can be very aggressive like I am, or you can be a little bit less aggressive like Tony, or you can be almost passive. And the results aren't that much different. So then the answer is, then why would you ever be aggressive? And I feel like it helps my other trading.
Understood.
Okay. Go back, Beth. Traditional equity traders are forced to make plays based on directional assumptions of underlyings. That is very traditional. Before there was all this stuff to trade, you had to pretty much be directional. Option traders, on the other hand, because we're strategic, we can tailor our positions to profit from whatever market future we choose, up, down, sideways, whatever. Over the long run, the market has generally been bullish, but short premium positions can profit even if they are directionally wrong, as long as they're not wrong by too much. Let's see how simple short premium accounts that maintain consistent directional assumptions have performed. We've never looked at this before. So we're going to say, stay long, stay short, or stay flat. Which one's done better? Well, of course, we've been in a bull market for 15 years. Probably staying long's been the best.
So you got to have the market cooperate too.
I would think staying long's been the best, staying short's been the worst, and staying neutral's been in the middle. Mm-hmm. But we'll see. One of the things I always like to say about option trading is that stocks and futures are very black and white, so they're very directional by nature. But option trading is a gray area. It's a strategic gray area. Very different world. You can be right and lose money. You can be wrong and make money. That's the challenge of this piece. Next slide. So we use 7 years of data in the SPYs, Qs, and IWM. We considered 3 kinds of hypothetical short premium trades that target deltas of neutral, +4 and -4. So we did not go for huge deltas. Okay, we went +4, -4, Tony. Mm-hmm. That's it, +4, -4. So you sold a 20 delta strangle, that's neutral, right? Mm-hmm. You sold a 20 delta put and a 16 delta call, that's +4. You sold a 16 delta put, 20 delta call, that's -4, right? You guys understand that?
Sure. I mean, if I were to look at these trades, all of them, I would call them delta neutral.
You would.
Yes.
But
so for me, the difference between not being delta neutral and neutral is somewhere around 15 deltas. Now, I like to get as delta neutral as possible when I'm opening a trade. So this could be large relative to what I would put on as an opening trade on a delta side, and then adjust when it gets to 15. But for me, this seems to be delta neutral.
Okay, well, so let's call these all close to delta neutral, because I agree that these aren't like 10 deltas, but we want it to be subtle enough, but just to show you that you can be a little directionally long or short, okay? Mm-hmm. And actually, the thing I love about this piece is it's going to show you that if you want to be a little bit directional, you do not hurt yourself at all. You don't have to be, quote, delta neutral. So all trades begin at 45 days. The reason we use delta neutrality, just so you understand, is it's easier to create research that way. So nobody can ever come back and say, oh, you skewed everything long, and we're in a bull market, or you skewed everything short, we're in a bear market. Now, we want our research to be neutral, but you can do anything you want. You'll see in the study, it doesn't matter whether you're a little bit long, a little bit short, or neutral. All trades begin at 45 days. They're recentered if they become 5 or more deltas out of line, and they're closed at 21 DTs. So there is recentering.
Sure.
Okay?
Sure.
And they're closed at 21 DT.
And 5 would be a small amount of delta for me for an adjustment too, just to put it in perspective.
5 deltas out of line.
Yeah, so you go from +9 to -1.
That's right.
+4 to -1.
That's right. and negative.
I would consider that delta neutral again. I wouldn't probably do anything. I'm just saying for me, these parameters are a little bit tight.
Okay, fine. Let's go to the next slide. Okay, now these are a little bit confusing, so just bear with us here.
Even more confused than I am today?
I'm not confused at all.
No, I meant me as a person. Go ahead.
So, first one, SPY. So +4, neutral, -4. Those are the three things. As you can see here, the +4, -4 from a win percentage actually outperformed neutral, which surprises me. The average P&L, and again, this is, what did we say? This was 14 years worth of data?
Oh, I don't remember. I'm sorry.
Beth, go back 2 slides. Or one
But it was
slide.
all our mechanics, 45 and 21.
Yeah, I
days.
know. 2 slides, please. I just want to remember how many years this was. Beth? One more.
No, the other
The
direction.
other direction. 7 years. Okay, sorry. Go forward one, please. 7 years worth of data. Okay, so on this, looking at this slide here, and the average time between adjustments, there's a lot of adjustments here still, even though it's kind of passive. 3.5, 4.5, 4 days, whatever. It's close
Once
enough.
a week, I mean.
It's basically once a week, that's not that much. And
1.5.
neutral was the worst performer. Long was the best performer over 7 years, and short was the second best performer.
We're in a bull market.
I'm surprised by that. Okay, let's go to the next slide. That's the SPY. If we look at the Qs, the results are basically the exact same. Except in the Qs, because we've had such a huge run up, only long made money net on average. In the Qs over 7 years, just because the size
I'm
of the rally.
surprised how neutral has a average P&L that's worse than starting off negative delta. That's surprising to me.
Yep, me too. Let's go next slide. And IWM, again, the long and short outperform neutral, and the P&L, the long and short outperform neutral, and everything else is kind of a little bit the same. But the numbers here are really strong to suggest that it's okay to have a little bit of directional bent. Let's go to the next slide. So,
Well, go back one slide for just a quick second. I mean, you said something there about having a directional bent. Yeah, if you got the direction right. If you got the direction wrong, then you suffered by almost the same amount that you benefited from. It's 80. I'm looking at 95 to 120.
no, if you got the direction wrong, you still outperform neutral.
When it comes to neutral, yes, absolutely. But you said having a directional bent. I was just saying.
So if you were bearish, you outperform neutral. That's the most interesting thing of the piece to me.
That's true.
Let's go to the next slide.
But you lost 30% by being wrong. If you started
So
off
over the long
negative.
term, with SPY and IWM, both the short and long delta traders outperform the neutral positions. There you go. If you pick a side, pick any side. Just these are minor adjustments.
Yes, they're very tight.
The Qs had less sideways movement than the SPY and IWM, meaning short premium traders had more pressure to be directly correct than the Qs. And given the size of the move in the NASDAQ, I can understand that. It's hard to be short the NASDAQ.
You know what? Put skew has to help you on all of these.
It does.
All of
It
these
does.
trades.
It does.
So the call that you're selling, even
It
though you
does.
might be leaning with short delta, is probably less in premium than the put. That's why you're getting those
It totally does.
numbers like that.
It totally does.
A little not misleading at all. Of course, the numbers are correct and true, but because of skew. If you did something that had call skew, you'd probably see a much different result. I solved the case.
Yeah, totally.
I'm like Scooby-Doo.
You're amazing.
I saw you having a hard time over there, so I figured to help you.
Qs had less sideways movement than the SPY or WM, meaning short premium traders had pressure to be directionally correct. And while consistently short delta traders may have been wrong, this answers your question, by trading out of the money, they were able to be long-term profitable and less tail risk than long delta traders. It's up to you to decide what strategies best fit your investment goals. I thought the most interesting takeaway from this is that neutral underperformed.
Yeah.
And, and I make a lot of adjustments, and neutral underperformed, but all these were adjusted and recentered.
Yes, sir. Yes, sir.
Okay.
Good job. Good job by you. Good job by the team. Sazov, about this, 2024 schedule. I do travel in Entourage. I sent you an email with all of my needs that I will need. Okay, perfect. We take a quick 90-second break and come back. We got more Tasty Live after this with, joy, your friend and mine, Mr. Scott Sheridan, next.